Okay guys, welcome to the next part of the video. So on today's lesson we'll be talking about the trading section, the time frame, and also the forex terminologies. So with this now, let's get started. So first of all, we're talking about the four main trading sections we have, which is the Sydney section, the Tokyo section, the London section, and the New York section. So from here now, the Sydney section starts from 9 p.m. to 6 a.m. GMT, which is Nigerian time. The Tokyo section starts from 12 a.m. to 9 a.m. GMT. London section 7 a.m. to 4 a.m. GMT. New York section, which is 12 p.m. to 9 p.m. GMT. So here now, the main thing you need to understand and the main thing you need to know is whenever you are going through your trading, whenever you are learning anything, you check the particular time you are on that particular chart, the particular time you are looking at it, what you are doing, and every other thing. It will help you know your next move and also how to be able to know the things you need to do and how to do them. It's very, very simple. For me here, I think I prefer the London section, which starts from 7 a.m. in the morning till 4 p.m. in the evening, which is a very good time for you to be able to trade. There is a lot of volatility there, but it's still the best time for the market to move properly, very, very well. So that is just it about it. Section trading section. It's just the particular time people trade. We are this is the particular time different countries trade on their own particular thing. You get, so it is very, very, very simple. But for you as a beginner and every other thing, just to make sure you focus on the London section, which is very, very good. It's just the best time for you to be awake and trade if you are in Nigeria. Okay, so here let's talk about the time frame. The time frame here is just explanatory. You get, so here we have the short time, which is 1 minute to 5 minutes, 15 minutes. Medium time is 1 hour, 4 hours. Long term is 1 day, 1 week, 1 month. So in here now, in this particular place we are in, this is our trading view. This is the trading view app. So in this trading view, if you look at the down part of it, you'll be seeing 15 minutes because we are in a 15-minute time frame. So you click on it here. So here now we'll be seeing 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hours. These are just like my main time frames. The one the one that was labeled with a star. So here now there are days, there are 1 week, 1 month, 3 months, 6 months, 12 months, and others. So everything varies. People like years and seconds. I don't think anybody does that, but that's for them. So this particular time frame, let me change it to 1 hour time frame. See, this is 1 hour time frame. Probably it's just the chart. Let me use the chart as an example. It's just the chart. It will be giving you a different scenario, different direction, different move for you to be able to analyze your forex market in a very good way. Let's see 1 minute. 1 minute time frame is always scary because you don't even know where to start. You have to zoom in, zoom in, zoom in, zoom in over and over again. So this is just how 1 minute time frame is, which is not that good. What you would do if you are analyzing the forex market, we will advise you to start with your 4 hours time frame. This is the 4 hours time frame. It will help you know where the market is going and also how to follow the market. This is the 4 hours time frame. See how it is. It is bold. You're seeing everything clear. You get to analyze the forex market. When you're analyzing, probably you check the 1 hour time frame. From the 4 hours to the 1 hour, you know the exact movement it's gonna take, and also how you can be able to get those moves properly. Let me show you one of the moves. Okay, here this is a recent probably recent BTC trade. It's just your analysis. You see, after the analysis, I went to the lower time frame, which is the 15 minutes time frame, to check on it. Okay, this is September 15th of September 2025. So you come here. This is just a small analysis I just made, because I already know the market is gonna move up at that particular direction, because there was a liquidity here which I mapped out probably the highest part is gonna reach before it goes down. This is 15th of September 2025. So let's just see how it went. Okay, so let me look for the trade. Let me go to the 15 minutes time frame. Let me look. Okay, see the trade here. This is the exact trade. If you want, you can pause it and check the previous thing I actually did. Okay, so it started selling. It started buying from that exact point. Reached this particular line that I drew out here before it started selling, which we already took taking our profits before every other thing. So this is just how our analysis have been. So this is it didn't buy up, but we already took our profits. Here it didn't tap us in before it started selling, which is not a problem. So all these things are the things you still get to learn. These are the things you still get to learn. I'm just explaining the time frame so that you'll be able to understand when you are going back to the market. You'll be able to understand the different time frames and also how those time frames work. This is 5 minutes time frame. You just get to know and understand how those time frame works. So this is just it for this particular lesson. So I'm sure I'm able to explain the time frame and the trading sections we have. These time frame and trading sections work hand in hand. That's the reason why I am explaining both of them. So I'll be explaining what forex terminologies is. So just take a break. Let's just take a break and I'm coming back. Okay guys, yeah, so welcome to my MT5. So this is the part we'll be talking about forex terminologies. You'll be hearing about a lot of things, a lot of languages we're using here. Then you'll be confused, you will not know what to do next, and also you won't be able to follow because you don't know what we are talking about. So like in the army, we have different names we use there. Different names they use there. They have different names, the salutes, all those things, the uniform. These are army's code. And here in forex, we have our own code. We have the way we do our thing and every other thing. So it's only two that is showing here, which is BTC and Ethereum. These are because this is Sunday, this is weekend. So by Monday, all these will be moving and moving fast probably. So everything depends. So this is a real account. Okay, so let's move on. So here now we'll be talking about spread. I won't be writing, so you just have to listen to me so you'll be able to grab the points I'm making. Be able to grab the point I'm making, which is very, very necessary. So here now, the spread is just the difference between the two numbers here. The two numbers I'm talking about is the 100 and let's say 115,780.91 minus 115,801.10. The difference between both of them is what we call spread, which is the difference is just a very simple aspect. And here now we'll be talking about lot size. I'm just talking about the spread. If you check all of them, this is just the difference. If you see the ones that even the market that are not open, you check, it's still like the difference, because both of them can't be exactly the same thing. It must be something we call spread, which is always there. Okay, so here we'll be talking about a lot size. A lot size everybody use. A lot size you get to use when you get started, probably. So we have the mini lot size, the macro lot size, standard lot size. So be looking at the upper part of this angle, this place, you will be seeing 0. Let's use 0.01. 0.01 is what we call macro lot size. The micro lot size, micro lot size, which is the tiniest lot size, which won't actually give you a whole lot of money. So here we'll be talking about the mini lot size, which is 0.1. This is the mini lot size, which will give you money if you use it well, and also take your money if you don't use it well. So that is just the real truth here. So here we'll be talking about the standard lot size. You know, I said there are 3 types of lot size: the mini, the macro, mini, and standard. So this is the standard lot size, which is 1 or 2 or 3 or 10. As far as it's starting from 1, there is no 0 behind it or before it or anything. So this is just how it is. So these are just the minor things you get to know and also get to see. These are just the forest terminologies, nothing else. So when they say peep, the peep is just the amount of movement which it moves from here. Let's say the market, you're in the market from here. Let me zoom in properly. You entered market in this particular angle, which is 1115, like 115,512.86, and your profit target is probably, let's say, it's probably at 115,600.30. That is the peep. It is moving, the movement, which is the peep, to move from here to here, and your stop loss can be here if you want it to be. So your stop loss can be at 115,459. Yeah, just taking 1:1 raised to power. So these are just the things you get to know. You can't just get to know it immediately, but with time it will be very, very simple. And this particular peep we are talking about is it means, like, the full meaning of peep is percentage in profit. A percentage in profit. That is what peep is. So here, I think, let me use this opportunity to also explain the bearish and bullish market. Let me explain. I'm done with explaining. Okay, I'm not done because there are still a lot of things. Okay, so here now the market is from here. If you are seeing this particular place now, from here the market is bearish. Let me put it in a bigger time frame. From here the market is bullish, but from here up the market is bearish. Let me use a pen. From here the market is from here to down here the market is what? Bearish. That is just how it is. Then from here to up the market is what? Bullish. Then from here to up the market is bullish, bearish, bullish. So this is just how the market keeps on moving. So this is just how it is. You get to see it in the trading view. This is the MT5. I told you it works hand in hand with every other thing that you need to use and be successful in your trading. So that is just it. So here we talk about equity. You see equity down below here. See equity. See your equity is the one I circled. So equity, your equity will be moving if you are in the market like this now. Your equity is the one that will be moving. Your balance will move. Your equity determines the amount of money that will stop. Your equity determines the amount of money that will be there when you close the particular trade you are in. If $500 is in your balance, then your equity is probably $530, and you close that particular trade. Your balance will now turn to your equity. It will now turn to 530. All of them will be 530, 530, that kind of thing. So this is just how it is. Your equity, because you get to see it when you get started with your MT5. When you get started in your trading, you get to see it. So that is just it. Let me just call out those words. There are words you get to see. Let me call resistance. It will be resistance zone and all those things. I'll get to touch all these things. I'm just like giving you a brief of the forex terminologies you get to hear, so that when you are when I'll be talking about it, you'll be like, I've heard this from somewhere. There is support and resistance, fair value gap, there are stop losses. I already talked about stop loss here. We have hedging. Hedging is for pros. I'll still get to teach you guys then when it's needed. Fundamental analysis, technical analysis, trend line, risk management, and many other things. Reversal, a lot of things I'll get to teach you guys. A lot. Let me just show you a picture of one of these things, so that if you are interested, you can actually pause the video and get to go through all those things. So from here now, you see the forex terminologies. You get to see price action. They explain what price action is. The resistance, they explain what it is. Reversal, scalping, spread, risk management, stop losses, and a lot of things. Reasons for stop loss break even, a lot of things here. So these are other limit. This is just what I'm talking about. This is the forex terminologies. It's talk about pips and others. Explain the pip very, very well here. Explained it very well. So you can pause the video and you go through it. It was what we call leveraging. You see, well, I talked about the lot size, micro, mini, standard, and every other thing. How it's being calculated and every other thing too. The margin. We'll talk about the margin. You see your MetaTrader 4. MetaTrader 4 is like the same thing with MetaTrader 5, but it's the updated one, which is the MetaTrader 5 that most people are using actually. So is what they call non-farm payroll. It's just the news that happens every Friday of every month. So that is just. So here we talk about broker. Everybody knows what the broker is. I explained it in a previous video. A lot of things. So this is just how we are going to be ending our class today. This is how we'll be ending our class today. So with this, we have finished the second part of our lesson. And if you have any question, you can drop it on the community group or on the comment section via this video. So I will be able to help you in any aspect you need my help in. Thank you guys, and anticipate for the next video. Thank you.